Elon Musk has essentially sold the majority of his 10 interest in Tesla, and it is certain that the company stock will soar to $3,000. Tesla's price has been rising quite slowly up until this point, but things appear to be changing as a result of Musk selling his shares. In 2022 may be the year when the company's stock soars. Experts estimate that the company shares could reach $3,000. In today's video, we'll examine how this might occur. Our attention will be on Cathie Wood's and Ark Invest's prediction. Will Tesla's stock therefore skyrocket to will people who want to invest benefit from it? To find out, keep watching. Tesla's stock price at the end of 2021 was $1086.19. There was little movement in the market that affected the whole year, so it finished quietly. As you may be aware, on December 28, 2021, Elon Musk sold a portion of his shares for $1911, as well as over 10,000 shares and over 923,000 shares for $1113. In other words, he has effectively completed the sale of his shares, which is noteworthy for Tesla stock. Next, the release date of Tesla's earnings report has been postponed until January 26, 2022. As the end of January approaches, there are certain figures we need to keep an eye out for. At the moment, the company's delivery numbers are the most significant. The widely acknowledged estimate for Tesla's delivery numbers is approximately 276,900 cars, comprising 261,400 Model 3 and Model I cars and 15,500 Model S and Model X cars. Many other specialists and researchers believe that this number might be significantly higher. Elon Musk's prediction that fully autonomous vehicles would be widely used in 2022 is the second important factor we'll be talking about as we approach that year. Thus, 2022 is going to be a huge year for Tesla stock. Why do we feel so certain that Tesla's stock will soar to $3,000 now? That's owing to Ark Invest, of course. What precisely is Ark Invest then? On its website, Ark states that its thematic investing strategies cover a wide range of market capitalizations, industries, and nations, with a particular emphasis on public firms that they predict will be leaders, enablers, and beneficiaries of disruptive innovation. Ark's ideas are not tied to conventional investing tactics and are meant to provide long-term growth. CEO Cathie Wood of Ark Invest is currently enjoying the fruits of her company's large investment in Tesla, which it made some time ago. Recently, the company sold a portion of its shares. Known for their expertise, Ark Invest seems to know what they're doing. Based on its projections, the company made a 5-year forecast for Tesla, but buying Tesla stock doesn't have to cost a lot of money to make you a fortune. Ark forecasts that after accounting for the company's 5-for-1 stock split, Tesla's share price would reach $7,000 a share in 2024, or $1,400. Their latest analysis suggests that it might hit $3,000 by 2025. This prognosis was produced by Ark using a Monte Carlo model with 34 inputs. The high and low projections included 40,000 possible iterations. Furthermore, Ark has revised its 2024 studies assumptions about Tesla's capital efficiency. Although Tesla produced 509 737-37 vehicles in 2019, a 144,505 increase over the previous year, and spent $1.33 billion on capital expenditures, Woods and Ark Invest had previously estimated that the company would pay between $11,000 and $16,000 per additional unit of capacity in 2024. This suggests that the company's capital expenditure per additional vehicle produced was approximately $9,200. Based on a 60% increase in vehicle production, Tesla's 2020 capital expenditure of $3.16 billion indicates a capital efficiency of $10,330 in 2021. It should be emphasized that while some capital spending is for long-term goals like autonomous data centers and Tesla's vertically integrated cell factory, this figure probably overstates the amount of capital required for an incremental automobile. Tesla promised to reduce investment costs by 75% over time with its updated cell chemistry and production process during its Battery Day event. Given that Ark Invest decreased gross capital expenditure per car in Tesla's most recent model, the company deserves praise for what appears to be higher capital efficiency. In 2025, Tesla is predicted to sell between 5 and 10 million vehicles based on revised projections and an additional year of growth added to their model. According to Ark, Tesla might potentially earn insurance revenues that are higher than typical due to the extensive driving data that is gathered from customer vehicles. In August 2019, Tesla began selling insurance in partnership with underwriters. It is now only available in California. In the upcoming years, Ark anticipates Tesla to finance its insurance coverage and grow its insurance business into other states. Additionally, because its cars have higher than average safety profiles, Tesla should use real-time data to price its insurance, drastically reduce customer acquisition expenses, and increase profitability. In the worst-case scenario, if Tesla sells 40 of its cars with an insurance package by 2025, its annual insurance sales may exceed $23 billion. In our bull thesis, Ark anticipates that as robo-taxes become more prevalent in 2025, Tesla's insurance revenue will be incorporated into a platform fee. Our price objective is increased by around $60 due to insurance. According to Ark's earlier value assessment, Tesla has a 30 chance of reaching fully autonomous driving in the 5 years leading up to 2024. As of right now, Ark projects that by 2025, the likelihood will be 50. Neural networks have proven capable of solving a number of challenging problems that were previously thought to be intractable since Ark's last projection, increasing the likelihood that robotaxis will be useful. As per Ark, the daily data miles provided by Tesla's fleet of vehicles have increased to 30 to 40 million from 20 million in the previous year. Because of success, Tesla might quickly expand its robotaxi service and use the additional revenue to support its autonomous network's manufacturing capacity. In 2025, Tesla might generate an extra $160 billion in EBITDA if 60 of its autopilot-equipped cars were used as robotaxis. According to our bull thesis, ride-hailing would account for the bulk of Tesla's enterprise value in 2025. It is noteworthy, nonetheless, that autonomous driving significantly increases the estimated price objective's dispersion. Tesla can only create less than 4 million units annually due to production constraints. Simultaneously, as shown in gray, technological and logistical obstacles prevented both human-driven and autonomous ride-hailing networks from being introduced in many low-end scenarios examined by Ark Invest. A human-driven ride-hailing network increases the predicted price goal range when production is unrestricted, as indicated by the green color. In 2025, ride-hailing services accounted for less than 20 of Tesla vehicles, whereas in the Navy, 2070 of Tesla vehicles were sold for ride-hailing services. Lastly, the anticipation that Tesla will launch a robo-taxi service is included in the purple high-end pricing projections. Could Tesla actually quadruple its share price to $3,000 by 2025, making it the world's most valuable and highest earning corporation under the leadership of the richest person in the world, rather than only hitting all those lofty goals while outpacing Microsoft, Apple, and Amazon in terms of speed? In actuality, that is the most recent estimate from Ark Invest, the company run by ardent Tesla supporter Cathie Wood, whose funds own more than $3, 2 cents billion, 2 cents billion dollars in stocks of electric cars. The prediction gave investors hope, and by midday in January, the company's shares increased 6.2 to $698 or $41 billion. According to Ark, Tesla's value will more than quadruple over the course of the next 4 years. In 9 months, if that occurs, the company's market capitalization will reach $3 trillion, presuming that the number of shares in circulation stays mostly the same. According to renowned accounting expert in the nation, Jack Ciesielski, it's a significant leap of faith. Ciesielski notes that Ark does not base its argument on the standard fundamental analysis used to determine a stock's worth. They are not considering Tesla in the traditional sense. Ciesielski offers no critique of Ark's methods. When you have a firm with such an unclear future, you have to approach it the way Ark did. He says, you must establish boundaries when your educated judgments regarding the most likely inputs. But there are some situations when conventional analysis yields a far better result than plugging a bunch of educated guesses into a mathematical model. For example, predicting how quickly the auto industry would grow and how much of that increase Tesla is likely to take is one such example. According to Ciesielski, one factor missing from this research is the competitive environment. Ciesielski presents a compelling case. First, Tesla's present dominance is being challenged by a plethora of new competitors. Second, whereas Ford and General Motors spend a combined $30 billion on electrification, Ford intends to invest $85 billion in EV development by 2025. By 2030, BMW hopes to have up to 25 its sales in this quickly expanding market at the same time as Ark predicts Tesla will reach $3,000 and Honda will have 2/3 of its fleet electric. Although Ark did not give a precise estimate, we may infer that Tesla's unit sales for that year will be closer to 9 million given its bulk scenario of 10 million. Last year, it sold 500,000 automobiles. Therefore, 8.5 million of the projected 10 million new Tesla vehicles expected to be sold worldwide by 2025 would need to come from vehicles now on the road. So, for the next 5 years, will Tesla eat up 85 of the sales gain while GM, Toyota, and Volkswagen do nothing? How do you feel about Ark Invest's Tesla projections? Please leave a comment below.